I think that in 10 years, our target is $2,000 a share. And I think that could be light by maybe $500 or $1,000 a share.
I think the headline here is that you sold some of the stock. That probably comes as a surprise to many people, especially if you think the stock is still going to continue to rise from here. Why'd you sell it?
Because it was up 20 times. And it became a very large percentage of some accounts. So I happen to own 1,115,000 shares personally. I haven't sold a single share, and I don't expect to for another 10 years. The prospects are brighter than they've ever been. I think it's much more likely they'll be able to go from 500,000 cars a year to 20 million. It's much easier to do that than to go from 0 to 500,000 cars.
Hey, I'm Stephen, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to some clips of legendary billionaire investor Ron Barron, who's sharing the fact that his firm has, regrettably, sold some Tesla stock and he still thinks that Tesla is headed to the moon. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a 2nd free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Why don't we start off talking about Tesla, because there have been a lot of changes at the company just in terms of what they're doing with Bitcoin and other things, and we've seen that stock really skyrocket before coming back just a little bit. What do you think? What do you see as somebody who's been in this for a very long time?
So we've been in Tesla since 2014. We started working on it in 2012, 14 to 16. We bought stock, invested $387 million. And that was 1.6% of our assets. It became worth $5.5 billion.
Now, I don't want to linger on this point too much there, but let's have a round of applause for Ron Barron for A, having the conviction, B, the vision, and C, the balls to actually invest. That's a large amount, $387 million into a single asset. And that has turned into, well, did turn into about $5.5 billion. Now, of course, let's bring these numbers back to something that's a little bit more realistic. Let's say, imagine you were doing pretty well for yourself. You invested $387,000 in Tesla stock around that time period, 2014, 15, 16. Pretty flat around that time. You're sort of buying pre-split around that 250 to 350 mark. That would now be $5.5 million. Let's pare it back even further. Let's say you invested $37,000, give or take. You'd now have about $500,000. Even if you'd only invested around $3,000, you'd have now around $50,000 or so. This is a powerful insight into the incredible effect of getting outsized returns on some of your investments. A typical index style investor is thinking, yeah man, I'll be pretty pumped if I get 7-8% per year. Double your money every decade versus doubling your money effectively multiple times every year over that period, which is what has happened to Ron Barron and everyone else who owned Tesla stock for a period of time. Those of you that don't know, I began buying Tesla stock in early 2016. Practically all I've purchased since, including to the present day. Pretty happy with that decision, and I still think there's a long way to go. But doesn't it just show you the incredible power of finding that 10x opportunity?
Over about a month ago, now it's worth $4.5 billion. In the past 6 months, we've sold about 1.7 million out of our 8 million shares that we held. And we sold them between $450 and $900 a share, average $660, $670. And so we still own 75% of our stock. I'm hopeful we hold that for a very long, actually more than 75%. I'm hopeful that we can hold that for a number of years. I think that in 10 years, our target is $2,000 a share. And I think that could be light by maybe $500 or $1,000 a share.
Well, you heard it, folks. Ron Barron there suggesting that he believes in 10 years' time, Tesla stock is likely to be worth between $2,000 to $3,000 per share. A 3.5 to 5x from where we are today. So
we're looking for a lot more. When we started talking with you about this in 2014, when we were buying the stock, I told you that I thought that we would make at least 20 times our money. We have made 20 times. We've now made 15 or 16 times our money. I think there's another triple to go. When we were doing that, you were telling me you were skeptical. Most of my friends were skeptical. Most of my investors were skeptical. Everyone was skeptical. But we persisted. And at the time we invested, it was unlikely, in most people's opinion, that electric cars were going to dominate.
So 2014, 15, 16, not that long ago, 5, 6, 7 or so years ago, less than a decade. The fact that Ron was one of the few people that recognized, and I use the word recognized, not hoped, not thought, not wished or dreamed, but recognized, we'll get to this in a moment, recognized that electric vehicles would be the dominant form of transport in the future. The fact that nobody else was on board, that people doubted this, shows how little thinking, how little engagement of one's brains had actually been going on at this stage before people shared their opinions with Ron. Now, I'm not saying this to be a douche lord, but everything that we know today, we knew 5, 6, 7, 8, 9, 10 years ago, such as the fact, not theory, the fact that the two most expensive components in an electric vehicle, the battery and the computer, were both on predictable declining cost curves. Now, this is kind of important. I want to say it one more time. 10 years ago, we knew that the two most expensive components inside an electric vehicle were both going to consistently and predictably decline in cost over time. Run that forward a little bit. Oh shit, they're going to be way cheaper in the future than they are today. Something to think about. Add to that the fact that we also knew, not thought, not hoped, not wished or dreamed, but knew that electric vehicles required far fewer moving parts than an internal combustion engine vehicle. If we think a little bit here, we go, hang on a minute. So you're telling me that once these things are ramped, we need to put less stuff in them. So then shouldn't they be less complex to manufacture, faster to manufacture, and cheaper to manufacture? That's right. This was also a known fact. Not a hypothesis, not wishful thinking, but a known fact. And we also knew that the total cost of ownership would be far lower. Why? Far fewer parts, far fewer moving parts means far less maintenance. And we also knew that the cost of electricity, the total cost per mile to refill an electric vehicle versus a gasoline, far cheaper for the electric vehicle. So let's recap. The two most expensive things inside are going to keep getting cheaper over time with no end in sight. A first principles analysis shows unequivocally that less parts involved in the process means that once these things are ramped and being manufactured at scale, they'll be way cheaper to produce than an equivalent internal combustion engine vehicle. And from the consumer's point of view, they're going to have a far lower total cost of ownership, far less repairs and maintenance, far less costs actually required to fill this thing up every time or recharge in the case of an electric vehicle. We knew all of this. It was very obvious that at some point in the near future, electric vehicles would become the dominant form of transport. This wasn't hypothesizing. This wasn't fantasy. This wasn't delusion. This was obvious. But the key problem here, the key distinction, is that most people were too dismissive and didn't actually look at or understand the technology or the implications. This is how people can identify enormous outsized investment opportunities in the future. Shout out to ARK Invest, doing their best to try and raise awareness. They've literally got their Big Ideas 2021 report going through half a dozen different technologies that are going to completely disrupt and change things. Their research is on solid ground here. They're making predictions that sound completely insane, just like people 10 years ago talking about electric vehicles becoming the dominant form of transport sounded insane, but they were right because they'd understood the information, the facts, followed the breadcrumbs, and drew a realistic conclusion. I'm trying to tell you guys now in no uncertain terms, the same shit is about to happen across the board in every industry. Artificial intelligence, deep learning, robotics, automation, genomics, everything, right? There's going to be enormous seismic disruptions. You can follow the breadcrumbs, look at declining costs, utility, all these kind of things. Another issue a lot of people just doubt is going to be viable. There's many people, most of the general public, do not believe that in the future, in the near future, 5, 10 plus years, we will be driven around in autonomous vehicles. Most people think this is science fiction, it's never going to happen, or it's 50 years away. Most people are unwilling to accept the implications here that the majority of people will not, in the future, will not own their own personal vehicle for transportation, but will instead hail an autonomous taxi on demand. It'll be cheaper and more convenient, don't have to garage it, don't have to insure it, don't have to repair it, don't have to do anything. Now, this is one of those same junctions where I'm here today telling you guys, in the future, personal car ownership will be a thing of the past. There'll be autonomous taxi networks. These will be transporting most of the people around most of the major cities on Earth. This is where things are going. Yet today I say that and most people are like, you're crazy, dude. Well, I feel like we're in the same situation now in terms of robo-taxis that we were with electric vehicles. Most people just reactively, reflexively think, no, there's no way, man. I don't believe it, because they haven't looked at the numbers, they haven't done the analysis, and they haven't drawn their conclusions. They're just reacting instead of thinking.
Now, of course, even General Motors says that by 2035, they're going to have an all-electric fleet. So it's going in this direction, and Tesla is the leader. What's interesting about
Ron,
this company?
Real quickly.
Why is it interesting now?
Can I just ask? Well, no. I definitely want to hear that, but I think the headline here is that you sold some of the stock. That probably comes as a surprise to many people, especially if you think the stock is still going to continue to rise from here. Why'd you sell it?
Because it was up 20 times. And it became a very large percentage of some accounts. So I happen to own 1,115,000 shares personally. I haven't sold a single share, and I don't expect to for another 10 years.
Ron Big Daddy Barron, over 1 million shares of Tesla stock in his personal account. What a beast, what a baller, what a legend. Now, I'm not quite in the same league as Ron Barron. I have around 1/200th as many shares of Tesla stock as the Big Daddy, but our thinking is definitely aligned. Neither Ron nor I intend on selling any Tesla stock anytime in the next 10 years. In fact, in my own situation, I don't plan on selling any Tesla stock anytime, period, until I can find good use for that capital. For those of you that don't know, I'm not investing in Tesla stock because I want a shit ton of money for myself. I'm investing to build my snowball to do future capital-intensive philanthropy. So I only plan on selling those Tesla stock when I find an enormous opportunity to do a lot of good in the world and I need the money. I won't be forced to sell anytime before then, and I think we've got a ton of growth ahead of us in Tesla stock.
But for clients, I sold 27% of their stock, 25% of their stock. And I said that, and I told Elon that I was the last in, bought for all my clients first. And I said I was in 2016 when I was totally filled on the accounts that I could buy for at our firm, and I couldn't convince other people to buy more. Then I invested for my firm in this company, and I think I'm going to hold it another 10 years at least. And I told Elon that I would be the last out, and the reason we sold was a risk management idea where it became a very large percentage of two funds that I manage, two focused funds that I manage. Became over 50% of those funds' assets.
I think we need to give Ron Barron some special credit here for having the kahunas to allow Tesla stock to run enough that it became more than 50% of two of Barron Capital's entire funds by value. I mean, that's nutty. For context, ARK Invest will never buy up a position beyond 10% of any of its single fund sizes. Ron Barron let Tesla run to 50%. One stock accounting for more than half of the value of the entire fund in two of their funds. Now, from my point of view, I'm all in on Tesla stock. Most of you guys will know that. But if I was managing capital for other people, there is no way in hell that I would have the kahunas to let any position run to more than 50% of a fund. And that's not to say that it wouldn't be a great idea. As I said, I'm all in on Tesla stock, and we know Ron's got over 1 million shares of Tesla stock in his personal account, isn't selling any. But when it comes to managing other people's positions, you have to think, do they have the same brain, balls and stomach that I do? And what I mean by that, do they have the same investing track record? Do they have the same risk profile? And do they have the same temperament to actually hold through volatility? The answer in most of those questions is no. And of course, people whose money you're investing on their behalf, generally speaking, probably won't have the same level of conviction in the stocks that you're buying on their behalf. Otherwise, they'd be like, well, fuck this guy. I'm just going to manage my own money and just go all in on Tesla stock. So I really have to commend Ron for actually allowing the Tesla position to run that far. Surely at some point it made sense to trim down again. I personally wouldn't be doing that in my personal portfolio, but from Ron's perspective, managing other people's money, it does make sense. I think the media is really going to be running with this, oh my God, Ron Barron sold Tesla stock, oh my God, world's ending. But in truth, I think it's a reasonable decision. Good risk management, again, not something I do in my personal portfolio, but when you're talking about managing other people's money and a single position is more than half of your entire fund, and that position is well over 10x, I can see where Ron's coming from here.
And I thought that risk mitigation was appropriate. And at the same time, one of those funds, Barron Partners Fund, it was $2.8 billion 3 years ago in assets. And it has a $1 billion line of credit, and we had employed $750 million. And when it went up sharply, I thought that it was appropriate to reduce the risk of this portfolio, to bring down that as a percentage of the fund, and at the same time to pay off all the debt. So we went from $750 million of borrowings to less than $100 million, and reduced the position in the account from over 5 million shares to 4 million one. It was painful selling every single share, since I think we're going to make, my hurdle is to buy a stock. We're trying to invest and make 50% over 3 or 4 years, and double in 5 or 6 years. And I think we're going to make a triple in this company over the next 10 years. And so it meets the hurdle rate, and you pay taxes when you sell. So it was, and the prospects are brighter than they've ever been. I think it's much more likely they'll be able to go from 500,000 cars a year to 20 million. It's much easier to do that than to go from 0 to 500,000 cars.
What a great point from Ron. Total agreement here. I think a lot of people are underestimating how incredibly difficult it is to ramp electric vehicles or any complex product to volume production. In fact, by 2010, end of the year, Tesla had delivered around 1,500 vehicles in total. Getting to 500,000 from there, that's an increase of about 330x. For Tesla to go from 500,000 vehicles per year to 20 million per year, it's only a 40x increase. And Tesla has learned so much and improved their manufacturing techniques so much in the intervening decade or so since the original Roadsters were beginning deliveries. Tesla has an unassailable lead. They're so far ahead of everyone else in terms of their manufacturing technology, their processes. We know the gigacasting, the octavalve heat pump. They just continue to innovate and pull further ahead. Tesla's biggest constraint now really is the speed at which they can build their vehicles and other products, which at the moment we're told the limiting factor is battery cell supply. I just want to reiterate one more time. Tesla in 2010, 1,500 vehicles delivered, now around 500,000. That is a massive, massive increase, well over 300 times. For Tesla now to go from 500,000 vehicles to 20 million, just a 40x increase in production. They'll need to build in total around another 6 or 7 factories, each doing around 2 million vehicles per year, and they're done. It's just a matter of scaling. And that brings me to all of the EV startups and the legacy automotive manufacturers. A lot of people are investing in these companies, and by the way, I'm not hating, you do you, invest in whatever you want. But I think a lot of people are failing to recognize how incredibly difficult it is to ramp to volume production initially, to get past that prototype stage, then to your first production vehicle, then to the next generation and to the next generation. Most of the EV startups that everyone's super excited about today, in my opinion, will be bankrupt well before the decade is over. And most legacy automotive manufacturers who, again, you have to think about them as an EV manufacturer now. Forget how many internal combustion engine vehicles they manufacture every year. How many electric vehicles are they manufacturing per year? Most legacy automotive manufacturers, again, in my opinion, will be bankrupt, will be acquired, or will have merged before the decade is out. There's only going to be a few dominant players in the future, one of which obviously is Tesla. Maybe there's room for a couple more. Maybe there'll be an Android equivalent to the Tesla, the iPhone of EVs. But Tesla, in my opinion, is going to have an outside share. And Tesla has made it look so easy that I think a lot of investors foolishly are assuming, oh, Tesla did it. Everyone else can just copy their plan and they'll do exactly the same, right? Wrong. They don't have Elon, they don't have the engineers, they don't have the technology, the IP, they've got nothing. And plus most of them suck shit at software, and most of them didn't think EVs would be extremely important in the future, and therefore most of them weren't locking in extremely long-term contracts for materials, especially for battery cells. And very few of these companies were thinking, you know what, we should vertically integrate as much as we can. Instead, they're like, oh, they can make our computer, they can make our seats, they can make this component, they can make that component. All of our suppliers can do all the work because vertical integration there, that's for idiots. Yeah, how's that working out?
So I don't want to spend all the time in Tesla, but let me just give a couple things. Now, number one, I think that, so Elon has said that the autonomous driving, which he believes is going to be effective by the end of the year, he thinks that alone is going to be worth $500 billion to $1 trillion in 10 years, just the autonomous driving feature.
All right, guys, I'm going to let you in on a little secret. Come a little bit closer, right? We don't want people to overhear this. So I've watched literally everything Elon Musk has ever said ever, read everything he's ever said ever. Like everything that Elon Musk has ever uttered in the public domain, I have seen, read, watched probably more than once. And occasionally I'll notice that Ron Barron shares information that I've never heard Elon discuss publicly. Now, maybe Ron's slipping up here. I don't know. Maybe Ron's hallucinating. Maybe he hits the 420 as hard as I do and just imagines things now and then. Did I say that? Anyway, let's move along. Who knows? But the point I'm making is this. On occasion in the past, multiple times, Ron Barron has disclosed numbers, figures, projections, goals, etc. that later were confirmed by Elon publicly. In other words, it seems like occasionally Ron will leak some information that he maybe shouldn't have exactly mentioned out loud. I don't know, I'm just saying. He does have a track record of saying, Elon said this, Elon's aiming for this, never heard that before, and then suddenly Elon later confirms that either directly or indirectly. So when Ron Barron says that Elon Musk believes that full self-driving alone is going to be worth up to $1 trillion, it's worth paying attention to.
And that's good. It's going to be a subscription business. My guess is, right now you buy a car, it costs you $10,000 to have autonomous driving. And at some point, I think that you'll probably pay $100 a month. And there'll be 20 million cars a year sold, I hope. And all the cars that have been sold before, it could be in 10 years, it could be a $40 billion a year revenue business, growing very rapidly because you're going to be adding more cars. There's a billion cars that you have to replace ultimately with electric cars. So he's got a really big runway in front of him, and this is going to be a highly valued business. That's one. So that alone is worth the present price of the stock in 10 years.
As Ron says there, huge runway in front of Tesla. Now, for those of you who missed that, the global vehicle fleet today is approximately 1 billion vehicles. Practically all of them are internal combustion engine vehicles. Tesla's goal, as they've stated repeatedly now and consistently for a decade and a half, is to accelerate the world's transition to sustainable energy. That means displacing as many of those internal combustion engine vehicles from roads today, around 1 billion, with electric vehicles. Now, let's just think out loud and imagine some scenarios in the future. Just imagine, in the future, at some point in time, Tesla has replaced 10% of the global fleet. 100 million Teslas on roads. Now, pick your own number. Maybe you think, oh, they're only going to get 1%, 2%, 20%. I don't care, whatever, pick your number. The point here, the potential for Tesla to sell literally tens upon tens of millions of electric vehicles every single year for decades to come is real.
In addition to that, you're going to get a business in Tesla that I think could be doing $600 billion a year of revenues and making $200 billion a year of gross profit. You get that for free. A battery business that could be doing just about as much in revenues and a little bit less in profits. You get that for free. An insurance business, you get that for free. You get a ride share business, you get that for free. You get the solar roof business, you get that for free. So the opportunity here, when I'm describing $2,000 as a target price in 10 years, I think it could actually be more than that.
So if I'm understanding Ron Barron here correctly, his, call it $2,000 to $3,000 10-year price target on Tesla stock is solely for automotive sales. Does not include any revenue whatsoever from the energy business. That includes AutoBidder software, moving energy around the place, includes no revenue from home batteries, home solar, whether it's solar glass roof or rooftop solar, doesn't include any revenue from any potential new product lines like HVAC, doesn't include any revenue from insurance. And by the way, just in a quick aside here, some of you might remember I posted a video on Tesla insurance a few months ago, thumbnail there, my ballpark estimate about $250 billion of annual revenue per year. Of course, you might think maybe I just pulled this number out of my ass. Maybe I did, but it was based on a reasonable, realistic scenario in my opinion. And just for what it's worth, Elon Musk actually did like that post on Twitter. The thumbnail very clearly, Tesla insurance will make billions. The thumbnail said $250 billion a year. Now, does that mean that Elon thinks I'm in the ballpark with the revenue? Now, of course, I don't know for sure how much revenue Tesla insurance will produce in the future, but the very fact that we're somewhere in the ballpark potentially with around $250 billion of revenue just from Tesla insurance just shows you some of the things that Ron Barron isn't even considering. No insurance revenue, no energy revenue whatsoever, no new product revenue, and no revenue from autonomous taxis. No revenue from the ride-hailing service whatsoever. I mean, dude, this is one of the reasons why I personally think Tesla stock can easily 10x again over the next decade from here. And I know that sounds ridiculous. I know that's a $7-8 trillion valuation. And the great thing is this video will be here in a decade's time, so you guys can hold me accountable. So please, somebody set a reminder for early 2031. Check back in. Is Tesla doing over $1 trillion of revenue? Over $2 trillion? And what's their market cap? Are they 5 trillion, 6, 7, 8, 9 trillion, even bigger? My best guess, let's call it $7-8 trillion in 2031. Keep me accountable. So I hope you guys have enjoyed this video. I always love hearing from Ron Barron. Big balls, big brain, big results. That's why he's a multi-billionaire and you and I aren't. And just finally, before I go, since I've laid out my prediction, what do you guys think? Let me know in the comments below. What will Tesla's market capitalization be in exactly 10 years from now, early 2031? Let me know in the comments below. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments
comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.